Today, we are looking at a true giant of enterprise software, Salesforce.
Right.
But this isn't about their history. We're examining what might be one of the biggest, most high-stakes pivots in tech right now.
It really is. I mean, how does the world's #1 CRM company completely redefine itself for the era of generative AI?
Exactly. And that's our mission today. We want to cut through all the AI marketing hype.
Mm.
We're going to look at the hard data from their Q3 fiscal 26 earnings and really figure out if this huge transition is actually working.
And we want to give you the clearest takeaways on their strategy, their financials, and some really surprising metrics that suggest this isn't just a plan.
It's already happening at a massive scale.
Right. This isn't about prototypes. We're talking
Yeah.
about a fundamental re-architecture of how businesses might operate.
Okay, so let's start with the financial scoreboard, just for context.
Okay, let's ground ourselves there.
As of early December 2025, the stock was around $247. But the really telling number is the year-to-date change.
A tough one. Down about 26%.
A huge disconnect, right, between what management is saying and what the market feels. So what's the financial reality here?
Well, that number, that negative 26%, it really captures the uncertainty. You see it in the analyst reports.
For sure.
A financial firm, for instance, just downgraded them to neutral from outperform. They've got a short-term rank of 3 hold. The market is basically, it's stuck
That's stuck between what?
between the macroeconomic pressures, the softness in global IT spending, and the company's incredibly aggressive, clear-eyed push into AI.
And you see that struggle in the mixed style scores, too. Growth gets a C, value is a D, but momentum's a B.
It's all over the place. The market doesn't know what box to put them in.
But if you look past the stock price at the actual operational numbers for Q3,
That's where the story changes. The numbers are strong, undeniably strong. They crushed their non-GAAP EPS estimates,
right, they delivered $3.25.
which was, 14% above what everyone was expecting? And revenue was solid, $10.3 billion, up 10% year over year.
And the thing that I think Wall Street really loved was the focus on profits, on margin.
Absolutely. Non-GAAP operating margin was 35.5%. That's an expansion of 240 basis points.
Which proves all that cost discipline they've been talking about for the last couple of years is actually paying off.
It's yielding real results, and management is projecting that confidence forward, They raised their full-year guidance for fiscal 26.
For both revenue and cash flow.
Exactly. Revenue is now expected to be between 41.45 and 41.55 billion, and the cash flow growth, they raised that to 14%.
And that cash flow is the war chest, right? That's what funds this whole AI build-out.
It is.
Okay, so before we get into the agents and the AI, let's just remember the sheer scale of the company they're trying to pivot. What are we talking about here?
We are talking about a colossal base business. They are, without question, the world's market dominator in CRM.
What's the market share number?
It sits at nearly 20%. And to put that in perspective, their closest rival, SAP, is around 8%.
So it's not even close.
It's a structural advantage they've built over decades. It's not a sprint.
And the reach is just profound. Something like 90% of Fortune 100 companies use at least one Salesforce product.
And that, right there, is an unparalleled distribution channel for anything new they want to launch.
It's a very sticky customer base.
Incredibly sticky. It's built on their revenue structure. Over 94% of their revenue last fiscal year came from subscription and support. The classic SaaS model.
And just look at the growth historically. They sextupled revenue in 10 years, from about $5 billion to almost $38 billion.
This is a company that knows how to execute a massive growth cycle.
Okay, and that history of execution is why this current pivot, which they're branding Agent Force, is so compelling.
This is where it gets really interesting.
This isn't just like bolting on a chatbot window. This is a total platform re-architecture. So how do they define this agentic enterprise shift?
So the core idea is moving from being a system of record to becoming a system of action.
A system of action.
Yeah. The agentic enterprise means they're embedding this AI deep into every single product, sales, service, marketing, everything to create these specialized agents.
And these agents do more than just summarize data.
Much more. They're designed to reason based on your company's own data, learn from interactions, and this is the key part, autonomously execute business processes.
And we are seeing hypergrowth that seems to validate this. Let's talk adoption numbers, not just press releases.
Okay, so Agentforce ARR, that's annualized recurring revenue, is soaring. It's up 330% year over year,
Wow.
which comes out to about $540 million in annualized revenue.
That kind of growth signals that real budgets are being allocated to this.
It does. They've closed over 18,500 Agentforce deals in the last year. About 9,500 of those are fully paid. But for me, the most important metric is this.
What's that?
The number of customers actually in production with this stuff jumped 70%, quarter over quarter.
So they're past the pilot stage. This is live.
Way past it.
But the metric that really shocked me was about scale, infrastructure. Agentforce has processed over 3.2 trillion tokens so far.
Trillion with a T, and 540 billion of those were in October of 2025 alone.
So why is the token count more important than, say, user growth?
Because token count is an infrastructure metric. It means customers aren't just logging in. They are feeding the AI massive, and I mean massive, amounts of their own operational data to process and act on.
It proves trust.
It proves two things. One, trust. They're trusting the platform with highly sensitive workflows. And two, it proves Salesforce has the raw compute power to handle this at a global scale.
And you see that trust in the case studies, which make this all feel, well, more real.
Absolutely.
For customer-facing agents, there's the Williams-Sonoma example.
Right. They built this virtual sous chef, this AI assistant named Olive, using Agentforce.
And Olive now handles what?
About 60% of their customer service chats. And think about that. A cooking query is way more complex than just a simple "where's my order" request. That's sophisticated, context-aware service.
And the internal side, for employees, is just as striking. Powered by Slack.
The Slack bot is really the core of their employee agent strategy. I mean, look at General Motors. They scaled Slack to 96,000 employees in just 9 months.
Unifying all the data that their internal agents need.
Exactly. And if you want the perfect example of retiring old systems and boosting efficiency, you have to look at the public sector, the IRS.
Huh?
They're using Agentforce to automate up to 98% of the manual activities in their chief counsel's office.
And the time it takes to open a tax court case went from 10 days.
Down to just 30 minutes? That's not just saving time. That fundamentally changes a government agency's capacity to deliver services.
That kind of automation, especially in a regulated government space, is incredible. But none of it works. Not Olive, not the IRS agent, without a clean, secure data foundation.
Which is the biggest competitive moat they have, arguably. Management thinks this data layer alone will be a $10 billion business next year.
So what are the pieces, and why is it so critical for AI?
Okay, so for an AI agent to act without hallucinating, without making stuff up, it has to run on what they call deterministic data.
Meaning secured, defined workflows, not just, general knowledge from the internet.
Precisely. And they achieve that with 3 key components. You've got MuleSoft for system integration. You've got Data 360, which is their rebranded data cloud for unifying all that data. And then the recently acquired Informatica for cloud data management.
So that stack pulls everything together into one reliable context for the agent to use.
It does. And the scale of data ingestion here is it's staggering. Data 360 ingested 32 trillion records in Q3 alone.
Up 119% year over year.
And they made a point to highlight that trillions of those were ingested using zero-copy integration.
Okay, hold on. Zero copy. For the listener, what does that actually mean, and why is that so important for AI?
So zero copy means you don't physically move the data from wherever it lives, say a Snowflake data warehouse, into the Salesforce platform.
You just point to it.
Exactly. You create a secure virtual pointer to that data. It's faster, it's cheaper, and most importantly, it solves huge security and governance issues because the data never has to leave its secure home.
That is a massive differentiator.
Huge.
Okay, so beyond the platform itself, we're seeing them get really aggressive in specific verticals.
They're going after rivals head on. They just launched an Agentforce ITSM product for IT service management.
And they're projecting a 30% reduction in operating costs for early adopters like PenFed.
It shows they're actively stealing market share. Look at life sciences. New bookings tripled year over year. They're taking business directly from Veeva.
Winning deals with Novartis and Haleon.
Right. They're proving that this unified agentic platform offers a better experience than those niche vertical-specific tools.
And the public sector ARR grew 50% year over year. More work with the Air Force, the Army, the IRS.
Which just validates the security and integrity of the platform. These are not simple environments.
So let's bring the tension back in. If the strategy's this strong and the adoption metrics are this good, Why is the stock lagging?
Right.
What are the big structural challenges that are threatening this whole story?
Well, they're significant. The number one headwind is competition. This is a multi-front war.
And the main opponent is Microsoft.
It's particularly Microsoft. With Dynamics CRM and LinkedIn, they have a powerful combination. And analyst reports have noted that Microsoft is using, let's say, very aggressive and special pricing to poach customers.
But if Agentforce is so much better, why would that work?
Because Microsoft can bundle everything. They can bundle Azure AI services, LinkedIn data, everything, and present a single, low-cost front.
So Salesforce has to prove that their deterministic AI is so much better and safer that it's worth it.
Exactly. They have to prove that it's worth paying for, even to Microsoft offers a price advantage.
And then you have the broader macroeconomic picture, high interest rates.
Which makes big companies postpone those massive spending projects. And those are exactly the kind of transformation deals Salesforce needs to close.
So the sales cycle gets longer.
It gets longer. And on top of that, there's a geographic saturation risk. Only about 33% of their revenue comes from outside the U.S.
Which is lower than rivals like Microsoft or Oracle.
Who are closer to 50%. So they need to expand globally. But that's expensive and can slow down that margin growth they've been working so hard on.
And we have to mention the acquisition risk. All that goodwill on the balance sheet.
It's a big number, over $51 billion, which is more than half of their total assets. It means they have to make these acquisitions, like Informatica, work seamlessly and quickly.
They really can't afford any integration failures right now.
Not right now, no.
Okay, so let's pivot to maybe the most critical question, monetization. How do they actually make money from this? Especially if these AI agents are designed to stabilize or even reduce human headcount over time.
It's a great question. First, they beefed up their sales capacity. They increased their distribution organization by about 23% this year just to handle the demand.
But the big changes in pricing. They moved away from that complex consumption-based AI pricing.
Which customers hate, by the way. They're afraid of those unpredictable costs.
Right. And they moved toward these flexible agentic enterprise license agreements, ILAs. How does that change the sales conversation?
The ILA takes away that fear of a meter running. It's a structured flat fee deal for a full enterprise transformation. But the real genius is what they call the multiplier effect.
Okay, what's that?
Customers who commit to the full agentic enterprise journey, they're seeing their average order value, their AOV, double, triple, or sometimes even go up by 5 times.
So they're successfully changing the conversation. They're not selling seats for humans anymore.
They're selling integrated value. They're selling the ROI on automation.
The conversation shifts from OPEX, cost per employee,
to a CapEx and ROI discussion. How much transformation will this platform deliver for my business? It completely reprices their entire value proposition.
It's a compelling deep dive into a really major shift in the industry. Salesforce is betting that companies don't want to build their own AI solutions from scratch.
And that really raises the final question for you, for the listener, to think about.
Go on.
As all these AI tools become common, where is the real long-term value? Is it in building your own custom models?
Or is the ultimate advantage in leveraging a specialized platform like Agentforce that already has the context, the secure data, and the workflows to automate your business safely?
A question that's going to define enterprise tech strategy for the next decade, I think.
Indeed. We really appreciate you joining us for this deep dive into the agentic enterprise.
We'll continue to follow this and other stories like it very closely.
So make sure to continue to follow our next release. Until then, stay curious.